What's up, my peoples? May pips be upon you. Look, Bitcoin is at a very interesting level right now, and it's pivotal, in my opinion. Let's just take a look. All right. You see the old all time high from 2017 over here, and we did all this dithering, and then we finally broke that level here. I marked it as a weekly. Should be marked as a monthly. I don't know why it's marked as a weekly, but you see how we spent a little time over here at this very same level. So there's some significance to this level at 19614. All right, call it 19615. All right. So if price breaks this support, this resistance here, it's going to be pretty significant support. Let's keep that in mind, shall we? Uh, and then we had price just climb up and do this parabolic thing over here. And then we ran into this. All right. Now, again, we're looking at the weekly. All right. Did all this sideways action. Price tried and tried and tried to get higher. Didn't. It couldn't. And then we got this bearish engulfer. Uh oh. Why did I say uh oh? Because that is a bearish engulfer, my peoples. All right. That is a bearish engulfer. And then it was followed by another bearish, big old bearish momentum candle. I mean, two of these back to back, that's a big uh-oh. All right. Now, I'm looking, when you see an impulse, the first thing you want to think about is the correction. All right. Every impulse comes with a correction, right? It tried to correct here with this bullish candle. This was all green at one time. All right. And what do I always say? I always say if you're going to measure the correction of an impulse, you want to at least see it retrace at least 38%. Well, this one did just that to the 38% Fibonacci. That's by a hair, but we're going to call it a hit because it was close enough. All right. It came up to that 38 and then it pulled away. It rejected. It rejected. The sellers came back in and asserted their dominance. Guess what, folks? This was last week's candle. This is the brand new candle for this week. And it's opening bearish, and it already has a little doggone shadow there, a wick. It started green, it started bullish, and then it flipped to red. I'm going to say uh-oh. Why am I saying uh-oh? Let's go to the daily. Because, folks, this is the impulse, and this is where price came back with that 38% retracement. See here, you can see it did hit the 38% retracement on the daily. All right, I didn't move anything around. All right, that's just the way it works when you start to see more detail uh, uh, when you go down lower in time frames, right? But I want you to notice this red thing here. What is that called? That is called a symmetrical triangle. What does that mean? Price is making higher lows relative to the last one, and lower highs relative to the previous candles. All right, and we're making lower lows, higher lows, lower highs and higher lows, lower highs, higher lows, lower. That means we're coming to a point where we're looking for a breakout. Where are we? This is a daily support here. See how price has found support here? All right. And we are now breaking it. All right. Now, this could come all the way down and end up as a wick, just like these. Or it could break. It could break the symmetrical triangle. Let me tell you something. If that happens, the next support area is the May 19th crash crash landing site of around 3,000. Folks, if we break these lows here at 33,672, if we break these lows with a close, if we close below these lows, we break the symmetrical triangle, we are on our way down to the next support. And if we break this support, ha, 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 hoi, 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 we're going down to the next support. Where's that next support at? Well, remember that level I told you to keep in mind? Man, that's gonna be rough. Let's call it 1962 19622. Okay, where we have support, where we have shown support in the past, where we have shown resistance. Excuse me, resistance and resistance and resistance. Once it's broken, it becomes what? Support. So, I'm calling this support, support. It's actually resistance here. Okay. Forgive me, will you? It's late. So, we're not looking here because these closes aren't below that. There's another good reason that I believe price will come lower. You see where these little dollar signs and stuff? This is the midpoint of a demand zone. All right. This demand zone I have boxed in here. All right. We've already tapped it. How many times? The demand zone was made here. All right. With this candle here, this institutional candle here, the last down candle before the up move. All right. It came, it went up, came, mitigated, dithered, and then shot up. All right. Here we are again, back here. It came down to the midpoint of this supply zone. This demand zone, and then shot up, rejected, came back, rejected, but not as strong. And here we are now, tapping on the opening, the candles, the beginning of this candle. All right. Every time price taps a level, it weakens that level. We've mitigated this demand zone a number of times already. If it comes down through it, it is highly probable that we will pass through this demand zone to the bottom. All right. I can't see us turning back around from here. All right. That's just my honest opinion of seeing how price is affects these demand zones after a couple of taps. A couple of tests. Okay, but I call them taps, right? All right. So bear that in mind. Also, look at the manipulation that is already being set up for liquidators. Here is liquidity. There's a liquidity pool hit. I believe I just did that. Why does it do that? There's a liquidity pool under this wick. There's a liquidity pool under that one. A liquidity pool under there. All right. Why wouldn't liquidators come down here and sweep these stop losses for people that took long positions? Why wouldn't they come down here and get these stop losses that are waiting over here, all with one swoop? Why wouldn't they? All right. Is this little speed bump, looking at the traffic that price would have to go through to go lower? All right. Looking at the traffic, is this speed bump here enough to reverse price? I don't think so. Looking left, there is nothing else supporting that. This is pretty good smooth traffic down to this level of support. This is just my technical analysis, folks. I'm not using any fundamentals. I'm not using the CME, the Bitcoin CME, the CME index. I'm not, whatever it's called. I'm not using anything outside of what I'm looking at this chart. I'm just doing the technical analysis on this chart. This looks bearish. All right. I've been saying that And every time I did say it, it went bearish because it's right there in front of you. All right. There are people who have religious zealotry towards looking at the price go moonshot up. We're going to go to $100,000 by September and everything like that. I'm thinking there's validity to that and all that good stuff. But the question is this the end of the bull run? Is this the beginning of the bear run? If we look to 217, you can find that comparison anywhere on the YouTube or internet or whatever. If you look at 217, you can see the similarities. You can see that there's room to go for this big dip that people are talking about buying. I'm trying to set my people straight. I'm trying to put it in your mind. Listen, give me a comment. Let me know what your analysis says about Bitcoin. Let me know, do you have are you hodling? Are you going to still put buys in here and in hopes that it turns around, or put buys in when it gets down here and hope that it turns around? Hey, look, man, this is serious business here. All right. Are there people taking shorts from here? You know, what are you thinking I'm telling you? I'm telling you it's bearish. I'm telling you there's money to be made, probably shorting versus going long. If you're just going to trade it, if you're just going to trade it, if you're going to invest in it, you do your thing. You do your dollar cost in investing, and you've been doing the dollar cost average since you've been up here. You've been buying here, and you're probably going to buy down here and here. That's fine. Do your thing, because at some point it's going to lift, right? I guess it depends on your account size and your tolerance level. All right, me, if it breaks this symmetrical triangle, I'm taking shorts, and I'm taking shorts to the next support, which will be here. If it breaks, excuse me, if it breaks, uh, here, and when I say break, I mean a close below the level. If it breaks this level at 3,000, or is it 30,000? 30,000, excuse me. Then guess what? I'm going to the next support. And man, oh, I'm sorry. This is the next support. If it breaks below here, and I told you about the traffic over here, it's not a lot of traffic. This is a speed bump. It'll probably come down here and reach this level, do this number, and then come back down. All right. Just like it did in 2017. It come down here, it dithered. You can expect it to come, probably not break this high, just come close. Then it'll come close again, dither a little bit more, come close, and it'll just find its way, grind its way down further until it reaches here. So now I'm no crypto guru. You know who I am. I'm not a crypto guru. I'm just a guy that does technical analysis. I'm a forex trader and everything with interest in crypto and Bitcoin, and more to the point, I'm more concerned about my subscribers, and I want to see you make money. I don't want to see you lose it, and I want to give you educated some educated way to make a decision. All right, I'm giving you my analysis the best I can, and I offer it to you. And if you like it, leave a like. If you don't, that's okay. But I'd love to get some feedback from you. I will talk to you in the next video, and trade safely.